All right, in today's video, I want to talk to you about buying a home during divorce. It's a tough conversation because quite honestly, it's a tough time, but there's things you need to know about what you can and cannot do if you're trying to buy a home while you're in active divorce. Stay tuned. I'll break it down. All right, Matt Gouget, Matt the Mortgage Guy, powered by You Mortgage, licensed across the country. If you want to connect with me and my team, it's simple. Go to greatmortgagebroker.com, fill out that quick form. We'll be in touch. We want to help you no matter where you're at. So common question. And, I feel like there's been an uptick in divorces over the last couple of years. Maybe I'm seeing more of these because, in mortgage and real estate, a divorce, quite honestly, is something that spurs the need to go out there and do real estate and mortgage transactions, right? You might have to sell a house. One of the spouses might be leaving and have to buy a house. And so I come across this quite often. I want to start with something that's important. It will vary by state. So one of the first things you want to find out if you're going through a divorce is, do I live in a community property state? So if you live in a community property state, it's going to be treated a little bit different. You also want to know what type of loan product you're going to be using when you're making this purchase. There's going to be slight differences between conventional products and government products as far as where you have to be at in the process. And so the first piece of advice that I want to give you is, while you're in the stage of separation, just kind of decided that you guys are parting ways, there's no formal agreements have been signed, it's going to be really hard to get a mortgage, especially if you're in a community property state. So I'll give you what the rules say, and then I'll kind of break down what that means. If you're in a community property state like California, where I'm at, you need to have a signed MSA, marital settlement agreement. It outlines she keeps this home, he keeps that home, this account gets split these ways, these debts get allocated. Here's which ones you have, you keep this 401k, you have this retirement fund. All of that stuff gets spelled out. And as you can imagine, as a lender, we need to know whose stuff is whose stuff, what debt is yours, what asset is yours. Also, if there's a case where there's child support or alimony, who's receiving it, who's paying it, and how that is all going to break down. So a filed marital settlement agreement, meaning it's been filed and entered into court, you got to have that at the very minimum if you're doing a conventional loan. On most government loans, you have to be officially divorced. It's got to be done. And so I get a lot of calls and I have a lot of conversations from people that are in the very beginning stages, haven't filed, no marital settlement agreement. In some cases, they haven't even fully decided if they're parting ways, and they're looking at, if she keeps home or if he keeps home and the other one buys a house, what's that going to look like? Quite honestly, it's not ready for that part yet. And I actually had the conversation today. What are the options? And one of the options that I've seen somebody actually proceed with that seemed like it fit all parties was the departing spouse, meaning one spouse is staying at the home, the other one is moving on and buying something new. Before any of the settlement agreement stuff was decided on, the spouse that was departing wanted to purchase a home. But since we have these rules in place, no marital settlement agreement in place, we don't know, if she's going to be on the debts. The play and the solve was a lease option to buy. Signed a lease option, meaning for the next 12 months, she's going to pay $3,000 per month in rent and putting down a sizable down payment / deposit, and has the right to purchase the property within 12 months. And depending on your state, it might take 6 months, it might take 9 months to get through the full divorce, have the marital settlement agreement drawn up, submitted to court, approved, and whatnot. And so that's going to be one where once that's all approved, and now we see, okay, that debt, not hers. That debt, not hers. Her assets, here's, what's, income is and going to qualify for the mortgage to buy 9 or 12 months from now. So that's another option. Really, what I would say for anybody who's going through it is I'm empathetic that it's really a challenging situation for most. And there's a bunch of different parts that are, scary and confusing, and you don't know how it's all going to shake out. You want to get the divorce settlement stuff aligned and dialed in first. Does that mean that you're probably going to rent, do some sort of lease option like I talked about, or do something else before you buy? The answer is yes. But I don't think that is, necessarily the end of the world. These all shake out different. Some are super amicable. Others are quite honestly a mess. But whatever the case, if you want to connect me and my team, discuss it, see what your options are, different states, different rules, different loan types, slightly different rules. We're more than happy to help. Go to greatmortgagebroker.com, fill out the quick form. We'll be in touch. Talk to you soon. Bye-bye.